This is not like, oh, hey, let's go up and to the right. This is not that kind of environment. What I saw in the markets most of last week, what felt were like VWAP sell orders. It was just consistent, orderly selling. So, I don't like that. There are opportunities that will open up and emerge. I think it's kind of remarkable that the S&P is only down 5 points from all-time highs, given the trauma of news that's hit markets from multiple angles.
I mean, a question that I will ask on that is how much of this selling is people like call it voluntarily de-risking versus involuntarily de-risking after the whipsawing in oil? Like there are rumors running around the street that several of the major hedge funds are down like billions of dollars on some of these oil trades. So I'm wondering if what you were seeing last week, Ram, was people being forced out of positions, deleveraging, debalancing, right? These sorts of things versus call it people who are otherwise liquid, have no margin concerns.
Yeah. Well, there's deleveraging happening, right? We had the deleveraging event start in crypto around 10/10 of last year, but pick an asset class. Private credit's deleveraging. Look at the gross leverage exposure that hedge funds have. They hit peak levels about a month ago. They're still in excess. So they're deleveraging. And good names are being sold off because they're deleveraging. It's not about the name. The hedge fund has too much risk on. They have to deleverage. The quant funds and their factors aren't working. They're deleveraging. Fundamental long short, they're deleveraging. The only players that are re-leveraging are the hyperscalers that are issuing boatloads of debt, like Meta and Amazon, including Oracle, to go buy more data center GPU compute from NVIDIA, who expects $1 trillion revenue between now and end of 2027.
So a question on that front then, if we're seeing everything sort of selling off in the manner that you're speaking, Rob, are we at the point now where people should just step back and let that go by? Are there sectors where you're starting to see value where you would step in and start lifting things? Like where are we in this cycle? Because I agree with you. We're seeing things like private credit starting to turn.
The valuations are extended. Like I'm looking at industrials, which is a major component of the S&P, and you've got names like Caterpillar and John Deere that are like 30, 35 times PE, and GE Vernova and Teradyne at like 8, like many, like industrials are a bubble. They're a bubble. It's not only a bubble. Bubbles are great. They're a great way to make money. You want to ride the bubble up and then get out when the bubble pops, but the bubble's also popped. We're on the right shoulder of the bubble. So there's some value maybe in home builders if you believe mortgage rates come down, but at the same time, the 10 years going up because inflation hurts stocks and bonds. They hurt stocks and bonds. You don't get the diversification benefit. So I think this is a time to get smaller in terms of your risk exposures and wait for a real capitulation. We actually haven't had that yet. Haven't had a real capitulation or where value really emerges.
Where are you on crypto, Ram?
I was going to
last Monday we were bullish because we were all last Monday we were all bullish, right? For those tripping score at home, right? And now
we're going to be 4K. I believe all of us said if we were buyers, we'd be buyers of Bitcoin there.
That's right.
We were right last night.
You're at a key level. You're at a very key level.
Hitting some resistance. Right. Where are you? Where are you at Bitcoin right now?
So this is
74 right now. I was just looking it up.
My view is that Bitcoin is running on MicroStrategies, or I guess it's strategies, STRC issuance. That is keeping the machine going. And they are doing a great job marketing STRC. It's attracting new flows. They had record volumes last Friday. So when that marketing process starts to slow, then I believe the bid for Bitcoin will slow. So I would take chips off the table now.
Okay, but then is that driving into alts too? I mean, we're seeing of all the darlings, ETH is material outperforming. So where's that
correlation?
Is that just Tom Lee? Is that just Tom Lee or retail saying, wait a second, Bitcoin, this correlation between gold and Bitcoin, which we've constantly seen, Bitcoin always trails gold, and the catch-up trade is now on. We've been watching BTC to gold ratios. That's starting. It looks like it's bottomed. It's coming back, and then ETH pops up, and he's like, "Hey, remember me?
Yeah.
Outperforming it all."
That's just correlation, right? China created the bid in gold and other commodities followed suit. China's not buying other commodities. Something to note, the commodities are showing weakness now too. Look at the DBC ETF, look at gold, silver, or copper. It's an unusual state of affairs that we have right now in markets. You have, you know, this is a higher volatility, higher risk market. Better to wait for the fat pitch that it'll present itself at some point.
Yeah, look, I still think that there's opportunity here in the crypto side because, to your point, with the dollar decoupling, a lot of sovereigns bought gold, and when they bought gold, gold went way up, and Bitcoin didn't move. And then the Bitcoin maxis are like, "Oh no, my store value. What happened? Like this whole digital gold narrative is breaking down, right? When it never did." And now that things are settling, they're like, "Wait a second. Now Bitcoin's starting to get a bid. The BTC to gold ratio is coming back. Wait, maybe the narrative never broke down in the first place." And I do think that's a tailwind. On the east side, like it's just again the fundamentals of an institutional crypto market with a delightfully weird asset. It's infrastructure, it's a tech company, and it pays yield, and it's ultrasound money, and they're starting to get their head around it a little bit. And so I do think that's gonna be the tailwind on the east side going forward. Of course, we're having Austin and I are arguing over the role of the EF going forward, which we can talk about in a little bit, but I don't know. I feel like it's still a decent setup for crypto. I said it last week, I was right. Uh, but it sounds like you're neutral now, Rom. You're pulling back. You're pulling back.
I'm more bearish than neutral.
You're
So
back. Okay. Bearish.
I also want to throw a dart on this one that I think is maybe something we don't see very effectively through the US markets lens, which is to say, one of the things that you've got to think about from a non-US person's perspective with Bitcoin is that this is your way to get your money somewhere that is not exposed to your current system. If we're seeing increased geopolitical shocks out of places like Iran, which could bleed into Russia or bleed into China, and you're somebody who's there, this is about the time when you're supposed to start buying Bitcoin, if you believe that thesis. So,
Tether.
and Tether, actually, yeah, Tether supply expanding would be another thing to keep your eye on. Like, if I'm planning about this, you should see Bitcoin price going up, but also Tether supply expanding.
Yeah,
But I would be watching for those signs as a countervailing factor to U.S. market forces here.
Yeah, I would look at US dollar also, like US dollar strength. And if you have a flight to safety towards US assets, then that doesn't help digital assets. We'll see. It's going to turn on facts on the ground around. That's what the whole thing turns on.
Yeah, 100%.
And it's reading what Trump's plans and goals are. I'm saying that on the margin, it looks like the conflict will last longer based on his comments.
What would Warsh do in this situation? Let's just say we had Warsh instead of Powell. What do you think would happen?
That's an interesting question. I mean, in this situation for the United States, you're going to expect energy prices to go up. But the problem is cutting rates doesn't really help you the same way in a supply shock. That was kind of the lesson of the Federal Reserve in the 70s, right? You got to make sure not to cause even more inflation by doing that. To be honest, this feels kind of like the situation where the Fed sits on their hands, right? Because they're like, we can't cut our way to more oil. We don't want to cause inflation elsewhere. The thing that I think would contraindicate that stance is the job market starts cratering.
It is a great point though, Chris. Like it has been strong and resilient. It's like a change of character. There's no doubt about it, right? So like, it's hard to have conviction, I would say, one way or the other.
I think if Warsh was in the seat, it would be different. It wouldn't be, I'm Jerome Powell, I'm on an island. It would be Secretary Bessent, let's put our heads together. What do you have? What do I have? And I think maybe there's some of that going on already, maybe not. But I think it'll be a much more coordinated approach, which should in the end be beneficial for the economy, I think.